Hello there, welcome to Relevation Talks, the third episode of 2022. And today I have the pleasure to cook Arne Allewaert, managing partner at AMAVI, VC based in Belgium. So we'll ask him all the hot questions we have in mind. Welcome to the grill, Arne.
Hi, Idris. Thanks for having me. Excited to be here.
Great. So why don't we start by the very beginning? So can you explain to us your journey into venture? So how did it start, and how have you ended up in this very specific industry, which is VC?
Yes, of course, with pleasure. So I'm Arne Allewaert, indeed the managing partner at AMAVI. AMAVI Capital manages a Proptech fund, so a dedicated Proptech fund with a pan-European scope. We'll dive a little deeper into that in just a few minutes. My personal background, I have an atypical background in VC because I come from real estate, so the very conservative real estate, as we all know. 10 years ago, I was involved in the setup of a property developer called Ion in Belgium. And we always have tried to do things differently because you operate in a very conservative market. But we have proven that if you address the market in a different way, you can really be successful. And you try new business models, you try to be always one step ahead on the average competition. And that way we managed to build a company of, let's say, about 150 people, 400 million in revenues, active in Belgium, but also starting in Luxembourg and Netherlands. So really growing to, let's say, a top development company in Belgium just in 10 years' time. And this, of course, gave us a very good view on what happens in real estate, and especially what the impact could be of technology and innovation on this huge, but again, yet very conservative space. The idea, though, to go into venturing, first of all, we thought, could we do this with one corporate, one company investing into several Proptech companies? And we immediately thought this is not the best idea, because we thought you create some kind of interdependencies between one larger company and a few, let's say, growing technology companies. So our aim was rather to create a fund and to combine several of these corporates into that fund and to have some kind of representation of the whole ecosystem. And with that fund, investing into several Proptech companies. And that way we can leverage on the network from real estate. We can share the expertise we got from real estate. And then, of course, connect what we call the old school real estate, to put it very simplistically, to the new school Proptech scene. And this was the whole idea to start with AMAVI. But of course, within AMAVI, myself, as I said, I come from real estate. I think it's important to know the pain points to address with technological solutions. But of course, this is not all you need. You need a lot more to have successful Proptech investments. So the idea was to make a founding team with three very different backgrounds, being real estate as, of course, an important one, but also technology backgrounds, and of course, investment experience, private equity experience. And this is actually the founding basis of AMAVI, having people from those three different industries all combined together. And at the intersection of those three backgrounds, we think you make successful Proptech investments. And that was the whole investment thesis.
Okay, great. Thank you. And we'll deep dive into this and challenges and all of that, but pretty clear. But if we do one step back before all of this, to your journey at Ion, you were among the first FTEs of the team, I think. So you saw the company growing tremendously. So if you look behind your shoulders, any anecdote or lessons learned or stuff that you could share that you have learned, maybe the hard way?
Oh, I've learned a lot of lessons the hard way. That's for sure. Indeed, so I was the very first, let's say, to join the company when it just started off. So we were just the three of us, the original founders and myself. And indeed, it were, let's say, 10 intense years, that's for sure, because we had quite a work hard, play hard mentality, which is always good, especially when you're young and you don't have any commitments in your private life. But the main lessons learned, I can name a few. But first of all, as I said, being different in a conservative space definitely pays off. So I would rather recommend every single real estate corporate out there to embrace change, while we still see that a lot of them try to push change rather away than embracing it. So I think that's of course not the right approach to really be a resilient company in the future. Secondly, we always aimed to build a very strong culture within the organization. And this is, to me, crucial because it's all about the people. And this is independent of what business you're active in, but the culture really is the glue between the people internally. And this is really the added value of a company. And this is especially the case within VC, but it's as most the case as it is in real estate as well. Thirdly, one of the main lessons learned is also to keep your focus. And this is, again, was certainly the case within the rapid growth of the real estate company, but it's especially also the case within a lot of startups or scale-ups that I see today, is having that priority in the right order, because there's so much opportunities out there. And a lot of people, founders or founding teams, try to focus on several opportunities at the same time, but that just doesn't work. It's so important to keep that focus. And that's why we as an investor also like to have what we call the niche players in the market, because niche players really find that angle quicker to go deep into a market, in a specific market, rather than to go very wide in a very broad market. And of course, that's also the important takeaway that we've seen in our past.
Yeah, sure.
And then, yeah, focus is of utmost importance. That's clear. We also had a very strong culture, and this might sound a little odd, but of marginal gains. And you know, if you're familiar with the concept of marginal gains, it was mainly known from the Team Sky, from the UK cycling team, which basically is that if you have a complex process, which real estate development is, if you could tweak every single step by just a bit, so increase efficiency just 1% in every single step, then you can have significant outcomes over the whole process. And this was like a whole mindset we had throughout the company. And everybody was involved in this, looking for these small optimizations in every single step. And next to the significant outcomes it could have on the efficiency, it also creates a mindset where people continuously look for improvement. And it also creates some kind of enthusiasm where people are really satisfied when they find this little tweak throughout the value chain. And this is what I see in a lot of technology startups, often not the case. People overlook marginal gains. You only go for the big shots, and a lot of money is wasted along the way as well. So again, one of the main lessons learned, and maybe a last one to finish up with, is also to build a resilient company, because we see there's a very rapidly changing environment around us. We think you also need several revenue streams, because one might be impacted by an external condition we could not foresee or predict, like COVID has had a lot of impact, of course, on several businesses, but having different revenue streams as a company is always a good idea. And this is also what we did as a development company. Development is great when everything goes well, but you can also have very steep falls as well. So we expanded into fund management and asset management of real estate assets as well. And this created a stable cash flow. And this allows you to build a larger company on top. Because if you have 150 or 200 employees to pay every month, and you have a bad project, this of course might be quite of an issue for the continuous continuing of the company.
When it comes to the multiple revenue streams, I think for a developer to integrate the value chain, that makes sense, because you avoid the conflict of interest of the developer who wants just to develop to sell, but don't think of the end user.
Exactly.
So you might have, you know, the property management perspective, and so it makes a lot of sense. But I'm not sure for a startup, because from a an investor's perspective, if you have a startup that have many different revenue streams, you might not be sure of where is the real traction, where is the product market fit. So it's a bit tricky, I guess. But
again, and it all comes down to focus again. But if you can have with the same product, if you can have a different, let's say, a parallel strategy, it's not necessarily bad. On the contrary, we have one investment, for instance, and they have a perfectly growing SaaS business. But on top of that, they also build a transactional revenue business. And these complement each other very well. So you can have steadily increasing business, but then because of the higher peaks in revenue, you can really have a more, let's say, cash flow or let's say sooner break-even model as well.
Yeah, okay. Now, maybe one last question before we jump into the Q&A related to AMAVI directly, is more related to you. So far, maybe what is the biggest mistake that you have done, or the biggest achievements that you're the most proud of? And it can be professional life, private life, really as you want, you choose. For the audience to know who you are.
Yeah, it's a good question. Okay, professionally, I think that's less of an interest. I think raising a fund during a pandemic period, because this is basically what happened. We started off in March 2020. This was, of course, raising funds with real estate people who never invested in a fund before, investing in an investment class they've never heard of before. So that was, of course, quite a challenge, let's say. So that is an interesting one. But more personally, as I said, we had quite some intense years building the development company, and still I did manage to get a good balance in my private life as well. So I'm happily married. I have 2 kids. I try to be quite sportive in my spare time as well. And I think this is where a lot of people struggle with in finding the balance, but is a key success factor though for your professional life as well. Because if you really don't find this balance, you cannot be happy in either of both worlds, I guess. So I think that to me is my biggest achievement, that I still got that balance, to be honest. And if you ask for my biggest mistake, yeah, of course, I made quite a few, but I think the biggest pitfall, so it's not really a mistake, but something to really watch out for, is that I came from real estate, of course, with a high interest in innovative solutions. So we started off looking at the most, let's say, intriguing and the best solutions out there. But we quickly find out that it's not about the best products out there. It's about the best people out there, because you can have the best product with, let's say, an average team, and your product might be outdated by tomorrow or the day after tomorrow. While a team with, let's say, an average product, but a top-notch team, they will every day, they will keep evolving the product, that it's always relevant to the market. So again, it's not a mistake, but it's something we need to watch out for every single day when evaluating companies.
Yeah, sure. That's the syndrome of the engineer syndrome, like
Exactly.
Olivier de Duve, the famous impact VC said. It's
and most Proptech companies are in that stage, right? They started off with a product, focused on the product, and then, oops, there's a market as well. Let's now focus on the market, but little too late often.
Yeah. So now let's discuss AMAVI. Can you please bring us through the complete journey since, you know, when you had the idea, when you decided to join, when you met your partner, then the fundraising, your meeting with the GPs, and finally, of course, now where you are, so AUM and, you know, the scope, geographical, stage of maturity, all the key terms, basically.
Yeah, okay. So as I said, the first idea phase was probably, I think, the end of 2019. And then we eventually took off, really writing the business plan, taking off, let's say, beginning of 2020, with the aim of launching the fundraising process in March 2020. But then, of course, we all know in March 2020, something larger than us happened, and which had a large shock on the whole world. So we kind of paused the fundraising process because it was very hard to convince people who are now fully focused on their business to say, hey, I have something else next to your business that might give you some strategic return in the future. Was of course not the focus. So what we did is we started investing though in smaller stakes in Proptech companies, so on our own balance sheet, but also to prove the investment thesis, because we were convinced that there were opportunities out there. This market is growing, so we really want to show the proof of the market. And then eventually we did our first closing, actually, of the fund at 40 million in Q2 of 21, so last year. And now we're about to close the fund finally, so do the final closing, let's say beginning of May, at 60 million. And 60 million is always the aim of the fund to have that as a final closing. And then, so we did 3 investments on our own balance sheet, transfer them to the fund. Up to today, we have 8 investments, and you have 2 more in the due diligence phase. So let's say that we'll have 10 companies by in a couple of months, let's say. It has always been the aim to build a portfolio of about 15 companies. And where we look at as a company stage, we try to aim for, of course, European PropTech companies. So we have a clear pan-European scope, but we try to look for what we call the scale-ups within PropTech. So not the pure startups with a bright idea and a bright team, but we need to see some proven product market fit. And that translates in about, let's say, 1 million euro in revenue on the downside. Why is that? Because we have, as LPs, mainly real estate and construction linked LPs. So construction companies, real estate developers, asset managers, property managers, architects, brokers, so the whole ecosystem. And they are looking for, of course, inspiration, how to keep their business relevant, but also solutions that they can use in daily business. So with just a bright idea, this is not to be deployed as from day one onwards. And then also, secondly, what is also crucial, and of course, you will recognize this, where we see a very scattered and fragmented PropTech landscape in Europe. So let's say more or less small initiatives in every single country, and most of them still focus on that single country only. While we now see the first phase of consolidation kicking in, and we see that the larger platforms start to exist, which look at cross-border activity. Well, you want to be the driver of that consolidation in the market. So that's why we look for the more mature companies, although it's a very relative concept in PropTech in Europe, but let's say companies with traction to be able to build more business upon. So it could be through merger and acquisitions, could be through partnerships. Anyway, looking at more cross-border activity in general. Yeah. And then from ticket sizes, yeah, that translates into, let's say, from Series A onwards. Again, the alphabet in venturing is quite broadly used, and especially in PropTech, it's very relative, as I said. And ticket sizes translates into, let's say, minimum tickets of about 500K as really a starting limit, up to, in theory, 10 million per company, but of course spread over several rounds. But let's say our sweet spot for an initial ticket is between 1 and 3 million. That's about where we like to start off with.
Yeah, clear. And the fundraising strategy to do with warehouse clubs, warehouse almost club deals that you roll out into the fund after makes a lot of sense, because you also prove, the access to deals, yeah, etc. And it's something that also Proptech One has done in the past, building first a portfolio and then pitching LPs to show that you have a track record, you have access to deals, etc. You don't have an exit track record yet, of course, and it's at the end of the day what they want to see, but at least you have a first investment track record, which is already something. So clear. Exactly. And now, big question in a very changing landscape, the PropTech venturing, because there were 3 PropTech funds in 2015. In 2022, there are 32 PropTech funds active in Europe, vertical PropTech funds. Of course, we know that the generalist funds are also more and more interested, because they understand the size of this opportunity and the fact that the volume of capital deployed globally in PropTech grow almost at 100% year on year, $32 billion in 2021 compared to 27 in 2020. So the question is, what are your USPs towards first LPs, and then most importantly, maybe your USPs towards founders?
Yeah, it's a good question, because indeed we wouldn't call it a crowded market, but there's indeed growing interest in the market. That's for sure. But on the other hand, before I dive into the USPs, I should say that we don't really see competition in the market. Of course, there are similar players out there which focus on PropTech solely as well, but it's this is the given of a growing market. When you're active in, for instance, conservative real estate or even in private equity markets, what you gain as a market share, you take from your competitors. So it's a zero-sum game. While in this, and of course, it's a very strongly growing market, so you can push the market together. So we have very open lines and very transparent communication with any PropTech investor or generalist we see out there. And this is, of course, great, right? This is awesome. But
I completely do agree. If I may, I completely do agree. Same philosophy. But nonetheless, in reality, there might be, competition in the access to capital or competition in the access to some deals, although the majority can be co-invested. I mean, in the majority of deals, you can co-invest. But sometimes when the founders are very cherry picking, So I do agree with the
Yeah,
philosophy, but if you apply it on a daily business, it may be a bit different. I don't know. I'm
that's
just
true.
challenging you. But...
But it's true. And indeed, in the competition, we often, or most of the time, we do feel competition indeed in fundraising. There you are often going after the same parties. But anyway, they can still invest in several funds as well. This is also a strategy that we see being deployed very, very often. But indeed, if we compare ourselves with other PropTech investors, so as you said, you're right. So we most of the time we co-invest with other investors, could be because they have not a geographical scope or just because they have another background, which is our focus, because we mainly come, let's say the founding team mainly comes from real estate. So we do understand the pain points of the sector well and look for solutions for the pain points we know. Because let's say that an average VC needs to get involved in every single sector over and over again when he starts investing. And that's of course more, they have a solution being presented, and then they should look if this solution covers a pain point within that specific industry. This is of course the other way around as we work. We do understand the language of the industry, so we can connect them with the real estate industry, of course. And this is what we see as our main USP, and which is also being appreciated by other VCs as well, because we like to team up. And as you said, there are a lot of generic or generalist VCs who are now investing in PropTech, but most of them do admit that it's not their cup of tea. It's a specific industry, and you need to understand the industry dynamics. So that way, we try to position ourselves as a potential partner as much as possible to team up with those generalist VCs on specific deals. Then I do think that having the combination of those three founding backgrounds in the team, in the founding team of AMAVI, also technology and also that investment experience, for instance, to build a buy and build case in PropTech as well, this could be a very interesting one. Just to give an example of that, one of my co-founders in AMAVI is called Jonas Danens. It maybe doesn't ring a bell in the broader audience, but he's the founder of a company called TeamBlue. So that's a web hosting company. And he started off the company in his bedroom at the age of 16. So it's in Belgium, but it sounds like a Silicon Valley story. And if we fast forward, so he started, just to be clear, started off in web hosting. Early 2000s, it was a very cumbersome process to start to host your website. He made it easy. So he found a way to make it a lot easier. And then he started consolidating that fragmented market, because there were, again, web hosting companies popping up in every single European country. And he did about, let's say, I think over 65 or 70 acquisitions throughout Europe, and basically consolidated the whole web hosting market through, again, a buy and build strategy. And this is, of course, not always applicable in PropTech, but there are some cases where this buy and build strategy could be interesting. And of course, having Jonas' background on this could be a very interesting approach, which most of the VCs don't really look at. It's most of the time this organic growth, which is the main growth strategy.
Okay, so this was mainly towards LPs, or am I mistaken?
No, this growth strategy, yeah, we could implement in our portfolio companies as well, because other VCs often don't look at, for instance, a buy and build strategy. And we have Jonas, who did, as I said, 70 acquisitions. Also, my business partner Frederick has worked for Waterland for 10 years, which is mainly known for, again, for consolidating fragmented markets. This is an interesting approach that we could bring also to our portfolio companies.
Yeah, okay, clear, crystal clear. Thanks. Now you have invested in different countries in Europe, even countries that are pretty far from each other, different culture, language, etc. So the question is, how have you strategized and processed your deal sourcing? How do you build relations with founder? What is your approach of the sourcing?
Yeah, hugely important, of course, indeed. So we try to go for proactive sourcing as much as possible. And of course, this might sound cliche, but this is really how you make the difference, I guess. We try, again, we map the whole value chain of real estate, look for the most, let's say, pressing pain points, and then proactively look for solutions for those pain points. So that happens through different podcasts, organizations. Of course, the PropTech Lab is a great organization for that. European PropTech House, different national PropTech associations out there, and try to meet as much as PropTech companies as possible. And then you can quickly see whether the team, there's a fit, and whether it really fits the pain point you're trying to cover. And then also maybe on top of that, We also have quite interesting deal flow through our LP network, because we have LPs from Belgium, Netherlands, Italy, Luxembourg, and they also have, of course, an eye out for what is interesting from their point of view. And that could be the asset management vertical, it could be the construction vertical. And then with their first screening, this is, of course, an interesting way to have an introduction to a company, because they already saw it is relevant for their business.
Yeah, no, of course. The LP network, if you have a construction / real estate LP base, there is so many tremendous synergies to be achieved with them, including sourcing of the startups, tackling the pain point they have, or testing products, or doing market intelligence workshops to refine your investment scopes, or so many stuff. Thank you for this. And now I'm a bit curious about what makes a great investor. So the famous Ron Baron, the founder of Baron Funds Capital. So they have more than $50 billion under management. He was the founder of this institution. And so he was saying in an interview recently that for him, being a great investor is basically understanding the world. So understanding where are the trends and be able to invest in them. And so seems common sense. Okay, but maybe naively, I would say that because we know that a VC, like the whole game is probably to invest at the cheaper cost, to sell at the higher cost, and to have a rapid growth of 10% per month, being able to invest in companies reaching 100 million in revenue. But I think if we skip all of this, maybe the very first important, essential criteria is to be someone with great values, I would say. So to be, it maybe all start with being a great person. So maybe it's a bit naive. So I would ask you, what are your views on this? To what extent the personal quality or the personal values of someone matters into the performance of an investment? And also, if you agree with this, what are your personal values, Arne?
But this is a good question indeed. And it's a bold statement on the one hand, but indeed I do agree that, of course, personal values are of utmost important. For instance, if I look at my personal life, this is one of the main things I want to contribute to my kids, is having great values. I think this is the most important you can give. It's maybe a stretch to say that it's only that, of course, for successful investments, but I fully agree that it's more than any other business, it's a people's business. So you need to indeed have that personal fit. And an investment in a company is like a marriage a bit. It's like really you're in for the good and the bad. And of course, your interests are fully aligned. So it's more than like the traditional private equity game or the traditional real estate game. And it's buying at the best price and selling at the highest price. It's really like personal game where you support your founders throughout the journey. That's for sure. So I definitely agree. It's maybe bold, as I said, to state that it's the only successful agreement. That's of course not the case, but it's a very good starting point. Personally, my personal values, I really, let's say, I think it's very important to have honesty and respect. I'm quite a direct person, and the companies I invested in will know that. And I rather have a person who always says the truth and how he feels than to hear it afterwards, honestly. Secondly, I do believe in diversity for successful teams. That's not easy coming from real estate, because real estate is per definition not a diverse sector at all, and private equity isn't either. VC is getting more diverse, but not there yet. While it does create very good different angles and insights to have a diverse team, and diversity comes in many forms, of course. But this is again one of the bases of the foundation of AMAVI. Then I do value entrepreneurship as very important. I'm a very strong believer of what they call meritocracy. So I really think that if you want to achieve something in life, you can really do this by working hard, working smart, etc. And it's not, let's say, determined by where you come from or what social status you're from. I really believe that you should be able to get to your goals by working hard yourself. And this is, of course, an important one, which we also try to see in our investments as much as possible. And then maybe a last one. This is a little controversial, I guess, as well, but there's a lot to do around efficiency. And efficiency is basically doing the things in the right way. I'd rather look for effectiveness than efficiency, because you can be very efficient, so doing the things in the right way, but not doing the right things in the right way. While effectiveness is doing the right things and hitting them hard. And I rather see that in a company than working all day and night, but doing the wrong things. So I really value effectiveness higher than, let's say, efficiency.
We say being busy is the new stupid.
Exactly. And you can be
it's so
efficient, busy as well, but
yeah. So
it's reaching the goals.
Okay, clear. And now concretely after the investment phase, you know, it goes to the IC, approved, due deal, term sheet, and then at some point you wired the amount of capital to the bank account of the company, and now the relation starts. So how do you work with founders, starting from them?
Yeah, important as well. So we call ourselves a hands-on investor because we always aim for significant minority stakes. So again, it's always minority, but we try to have impact on the company because we think we can add value. And of course, we should be able to add it as well. Normally, during a due deal process, there's always quite some personal interaction involved, and not only through mediums like this, like Zoom, but we really like to see the founders, shake hands. We even had one investment where we boldly told the founder, there's only one last request. We want to be in a sauna with you. So just to have, it was just as a joke, but we want to have that personal connection from, let's say, the due deal process onwards. And then, of course, indeed, it starts when you wire the money and you really are in the board, because we always try to be in the board as much as possible. And we really want to be involved in mainly business development because we think we can really add value, but also in the personal growth of the founding team. Because we see that often we invest at the stage where the company goes from this product focus, founder-led, more, let's say, chaotic company towards a more professional organization with processes in place and really an outbound focus, focused on marketing and sales. And this is basically what we did in the past with the development company as well, is really branding it well and really focusing on the market rather than just on the inside of the company. And this is, of course, an experience we can bring to the founding team as well. So we are basically a partner on call, let's say, available for any time they want.
Yeah, clear. Okay, thank you. And this stage of passing from a chaotic to a company that scales up. My friend Conan from Sustainable Future Ventures has a very clear sentence for this. It's helping the company founders from doing everything to become just people's manager in a way. But I'm also curious about the investment teams that are currently exciting for you. So is there any team that you dream to have in your portfolio? Because if you have an inbound strategy, as you said, so you identify teams, you start from a proactive approach. So what are the teams that for you would be in your dream portfolio today?
Yeah, so our scope is indeed Proptech in the broadest sense, so the whole built world value chain. But of course, as you say, within this value chain, we have identified some interesting themes. And so one, for instance, is water. We definitely believe that there's a lot to do around water, and it has many forms, but it's just early because the price of the water doesn't incorporate the value it could bring and the scarcity it currently has. So there we want to build more around that water segment. There's a lot to do around self-storage as well. We think this is a very interesting asset class to be disrupted in the next say, a couple of years. So there also we want to build more on that same platform. And then, of course, generally speaking, there's a lot to do about sustainability. I think maybe too much as a buzzword. It doesn't really get this the right content to me. So a lot to do around software, but I rather also see some hardware innovations within this real estate construction space as well. And especially when looking at the renovation market, we were actually discussing this a couple of days ago. So looking at renovation, this is a very interesting segment within real estate, but again, a very hard one to tackle at scale. So in my wildest dreams, I'm still looking for a platform by which you can identify, first of all, the very interesting assets. And
Okay,
then
hold
secondly,
on,
yeah,
because
you have one?
in your wildest dreams, I was afraid to hear something else. But okay, go ahead.
We'll leave that for after the conversation. But so I'm looking for something by which you can identify the interesting assets and then, of course, upgrade them at scale. Per definition, upgrading an existing asset at scale is rather hard, but we do see some interesting, let's say, initiatives popping up around this. And this, to me, is the market to be tackled, is that existing
Yeah.
stock. We also see now regulation kicking in to really push that forward. And this is, to us, the interesting
Yeah.
market.
Yeah, I'm also regarding this specific topic. I'm also excited about the Uprising value propositions, because you have a lot of buildings in cities across all countries in Europe where you have, in French we say des dents creuses, so it's like an empty tooth between two roofs, to say so,
Exactly.
and where you have an uprising potential, and we know that there will be a strong urban densification. And so it's hard to find new plots of lands in cities, but you have a tremendous potential of uprising. And so there are a couple of startups mapping the cities to identify where you have this uprising potential. So it's not exactly a renovation, but it's part of the retrofits story.
Yep.
And so very exciting. And in terms of the retrofit issues, Nicolas Samios, my friend from Proptech was also saying that currently in Germany, you have millions of homes that are below the minimum energy efficiency standards, and so that cannot be rented. So it's lost assets, it's assets that become obsolete. So it's really definitely an important important
That's an interesting one. And this also brings, of course, then an opportunity from the real estate perspective, because we've all seen those distressed assets coming on the market in 2007, 2008. I honestly believe that there will indeed be a lot of distressed assets on the market in the coming years as well, but distressed from the energy point of view. So large investors will really try to get rid of this portfolio because it doesn't meet the criteria anymore. And this could be a huge opportunity to start buying them, upgrading them, and selling them. This is huge, definitely.
Yeah. Yeah. Now, last question maybe, which is a topic that I'm struggling a lot with at the moment, is the idea of the cost of success. So, of course, it's an abstract topic, almost philosophical. But what is, according to you, the limit that you should not cross if you want to be successful? Otherwise, it's too expensive. So how far must you ready to go to sacrifice your private life fundamentals for the sake of being successful in your business? Because if it costs you your internal peace, if it costs you that you become someone else because you just you went too far away from your personal fundamentals, isn't it too expensive? But maybe at the same time, if you're not ready to sacrifice it all, maybe you're not made to be an entrepreneur. Someone that I find often inspiring, although controversial person, the founder of The Family, co-founder Oussama Ammar. So he was saying that if you want to be the founder of Google, of course, it's an easy sentence. But if you want to be the founder of the next Google, you must be ready to sacrifice everything. And the risk is that there are huge chances that you won't get anywhere, that you would not be successful, but that's the risk. But if you're not ready to sacrifice everything, you're not ready to build the next Google. So where is the right equilibrium there?
Interesting question. I know you're a young dad as well. So this is indeed something we struggle with every single day, right? And honestly, my personal take on this, if it needs to sacrifice your private life and your inner peace, it's too expensive. That's my honest take. There was a US philosopher who once said, the price of anything is the amount of life you exchange for it. And this is indeed true. So it's just a matter of how much you want to give in exchange. And this is a very personal take. So personally, I would feel having failed if I would lose my balance in my private life because of an imbalance in my professional life. And I don't think it's really worth of throwing that away. So I think having a balance, as I said in the beginning, having a balance in your private life will really benefit your professional life. Okay, but that being said, I think you do need to have some passion in life. And that could be a passion in your private life, in your professional life. It doesn't really matter. I admire people who have whatever kind of passion it might be. But passionate people are always happier, right? And this is the idea. And then it doesn't count how much hours you work, but you need to do the things you love. I have honestly, and again, maybe a little controversial, I have never saw someone having a burnout by working too hard. Burnouts are caused by the feeling of losing control in what you do and disliking the things you do by external conditions, but not just the mere hours you work. Because if you love what you do and you still manage to find a balance, there's no issue at all, right, with working hard. But that's, again, a very personal take on this.
Yeah. My take on this one is, I think it all depends on the split between your inner life and your external life, I would say. So, there is this famous podcast of, it's a Stanford e-corner, a Burnout Manifesto, Gabriel Parisi. So he's the founder of a Smart Shower, interesting case.
Mm-hmm.
But the story is, he starts explaining, so it's the story of a founder who graduated from Stanford and then starts to work on an exciting product. Then he hires a team, do a small fundraising, and then after a bit of adventure, a couple of years, he shipped the products, millions of units sold, big success, blah 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 blah. And then it's a story of another founder who graduated from Stanford, started to work on a project. It was almost daily crisis. Almost every week, he had the feeling that he would end up the company for good. And then finally, a couple of years after, he launched the product, millions of delivery sent, millions of units sold, etc. But that day, it was the feeling that he was the most empty in the world and the most alone. And of course, it is the same story of the same person, but it's the external life and the internal life. External life is what people see. Internal life is how do you feel? And my feeling regarding the burnout, and at the end of the day, the cost of success is maybe that if these two lives are too far away from each other, then you can burn yourself. And so it's all about trying to have your internal life, your intern and external life close so you're not fragmented internally. But of course,
that's true.
Conceptually.
To your personal take on life, right? But I do certainly agree with you, Idris, that having this balance, and again, for everybody is different, but having this balance to me is crucial in life. Whatever you want to succeed in, privately or professionally, but being a balanced person always reaps the benefits. That I agree.
Thank you. So the philosophical last questions and comments and conversation are now ending up this 40-minute talk. So it was a pleasure to discuss with you and to understand more of the views of AMAVI. And you'll be, of course, joining the rest of the global urban tech community, innovators from the built world during Relevation 2022, 29th and 30th of June. So if you haven't grabbed your ticket yet, do it now because prices are rising soon. Thank you, Arne. We speak very soon. Bye-bye.
Thank you, Idris. Bye-bye.